All right, well, let's talk about the housing industry, because right now, like I read your excellent piece about Lennar, and you and I agree about Stuart Miller. He's in the book, and we think he's a fine man. But you're not crazy about the group right now. After being crazy at the bottom, candidly, because I know that you and I both agreed. Well, I shouldn't say that. I agreed with you and therefore went out very hard because I do talk to you. But you're kind of lukewarm right now.
Yeah, I think that what we are concerned about is the market is too hot. And there's just a massive amount of capital that's coming into the space, which is really about, alternatives just are not as attractive. So I call the residential housing market the prettiest girl at the dance. So you have a massive amount of capital, whether it be the sexiest girl at the dance or the prettiest girl at the dance right now is build for rent. And we just published a report that's a deep dive on the build for rent market. In the last 18 to 24 months, Jim, we've had $60 billion of capital announced that's coming into the space. But they're all going to the same markets. And so I think there's concentration risk on top of the land grab that the public companies and the private builders are buying so much land, both through options and owned. And land inflation is up over 30%, which means at some point, unless they can continue to raise prices and pass it along to the consumer, we're going to see correction in margin. So we're a little early, but we see a lot of, I think, what I'd call white flags, red flags, yellow flags, whatever you want to term it, that lead us to be more on the sidelines right now.
Well, let me push back for a second, Ivy. I have to tell you that when you have a man as smart as Doug Yearley or Stuart Miller, and they're talking about the idea that there's going to be multiple years because of the fact that millennials need homes and we're underbuilt and we haven't built as many as we used to, they encourage me not to think that it's secular growth, but think that the cycle is not the way I used to think it is. Are they drinking the Kool-Aid? Because we know Kool-Aid was a word that you once mentioned.
Yes, absolutely. I agree with you. Doug Yearley is an incredibly smart man and one of the best CEOs in our sector and a long-term friend. But I would tell you that we have just recently published a report called Cradle to Grave that is 100% contrarian to everyone's view that the United States has a severe deficit of what we've seen estimates out there, 4 to 6 million in that range. We actually believe the industry is already overbuilding in single family to normalize demand. This is one of the conclusions of the report, by roughly 20% for single family and about 10% in multifamily. So we couldn't be on more of an opposite side of where the market is and where the industry is, frankly.
Well, I have to tell you, and I know we got to wrap things up, but I cooled in the industry because you told me to. I'm not going to go against you. I've lost too much money anytime I have. You're the best in the industry. The book is really great. And I didn't get to talk about how golf turned out to be a good way to be able to get into the man's game. The book is Give Me Shelter. The analyst is Ivy Zelman, who's a terrific writer, by the way. Oh, everybody's named Z in the book. The daughters, the dog. There's a lot of Z's in the book. Ivy Zelman. Maybe we don't buy these housing stocks. She knows more than everybody.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.